A lot of investors have flocked in since 2020. They're all very worried because probably they're seeing this level of correction, this magnitude of correction for the very first time.
India is a structural story, and therefore structural stories will play out in terms of their performance over a long period of time.
What exactly were the emotional roller coaster that you went through?
I saw a more precipitous kind of a market downfall was the internet bubble burst.
So Vineet, what do you think about the current valuations of the Indian stock market? Hey everyone, this is Vidhaan and I welcome you to another episode of Capitalise, the Extreme Finance podcast by PhillipCapital. Vineet, it's an absolute pleasure to have you with us today.
Pleasure is mine.
So Vineet, if you had to introduce PhillipCapital India to the masses, how would you do that?
First of all, I will say that PhillipCapital is celebrating 25 years in India.
And congratulations.
That shows the length of time that we have been here in this country. It is also indicative of the fact that we have been able to navigate the markets with all its ups and downs reasonably all right. We are a team that started with only 10-12 people way back in December 1999, and now we are 500 people in this country. So that shows that we have grown, the market has grown, and the firm has grown too.
Absolutely. This is beautiful and congratulations to you for the 25th anniversary.
Thank you.
Now, what were some notable milestones in this journey of 25 years for PhillipCapital?
There have been many. I guess the first and the foremost that comes to my mind is that we are known as PhillipCapital now, but this is the third change of parent shareholding.
Okay.
So we started off in December 99 as a part of a US multinational, and at that point in time we were named as Refco Sifi Securities.
Okay.
Somewhere in between we actually changed to another shareholder which was also listed on NYSE in New York. At that point in time we became MF Global, and it was only in 2012 that we became a part of PhillipCapital, which is headquartered in Singapore.
So Vineet, how has the Indian landscape, the Indian financial landscape evolved over the 25 years with PhillipCapital operating in India?
So when we started the business, which was, as I said earlier, December 1999, it was very early days in terms of the electronification of the markets, right? So National Stock Exchange and then of course Bombay Stock Exchange were becoming online trading platforms for the whole country. If you remember, at that point in time, there were a host of other regional stock exchange, spread all over the country. But over a period of time, all the consolidation happened, and now we are in an environment where there are only two principal stock exchanges: National Stock Exchange and Bombay Stock Exchange.
Correct.
So this entire evolution, this entire journey of consolidation of the financial market itself has been something that we have been a part of in terms of our own journey. The other thing that happened quite rapidly was about the dematerialization, right? So you remember there were times when all the shares were in jumbo share certificates, physical, right?
Physical certificates.
Physical certificates. And then started the whole process of depositories and the dematerialization and electronic balances.
Right.
Then came the time when in addition to the stock exchanges trading stocks, we have derivatives. Right? The futures came, the options came, the currency futures came. So these last 20-25 years have been so transformative, and also an opportunity to learn and to make others learn in terms of our clients, that it has been a very enjoyable and a very, very satisfying journey for all of us.
Okay, that's great. Have you held some physical shares with you back then when there was no dematerialization?
Yes.
Was it difficult to store them?
It was not difficult. I mean, there were all folders and there were box files and all of that. But the process became more. Yes, the process became more complicated because those shares had to be converted into dematerialization, and a lot of companies and the share registrars did not have the process laid down. Some of the shares that I held personally, they actually never got converted. Right? The companies became delisted and all of that. So it's a part of the game. But yes, it's something that is still in my mind.
Glad people don't have to hold the physical shares and store it somewhere now.
Of course.
And how do you see the financial landscape in 2025, which again is your 25 years of PhillipCapital? So how do you see the financial status of India, the stock market? What's the outlook for you?
So if we all notice, post-COVID, the Indian stock market across large caps, small caps, mid caps have done extremely well. Right, India was one of the best
Absolutely.
performing markets in
Absolutely.
23 and in 24. But in the last couple of months, there has been a good amount of correction. People have been clamoring, in terms of where the correction will stop,
Yes.
and people have, seen their portfolios give, underperformance or negative returns. But sitting today in the month of March in 2025, I still believe that a lot that has been put together in the last 10 years still is intact.
Right.
By that I mean that India is a structural story, and therefore structural stories will play out in terms of their performance over a long period of time. So the policy changes that have happened, the amount of work that has gone in terms of still making our regulatory environment more sophisticated and protective of retail investors are some of the ballparks which are important for markets to do well hereafter. Now, what else is still intact? The consumption is still intact. The government spending has come back in the last quarter, in October to December. And if you remember, the third quarter GDP numbers were higher than what was expected. Right? For the first time, India showed a quarterly GDP of more than $1 trillion.
Wow.
Right, which is a milestone, which is a good reason to celebrate. So as we move towards the often stated $5 trillion economy, it is important that at a quarterly level we do keep clocking $1 trillion per GDP number. And Mahakumbh, which is where we have seen a lot of consumption and a lot of ground level activity in Uttar Pradesh, is the quarter of Jan to March 2025. So I'm quite hopeful that when we finish the year of March 2025 as a financial year, we should be above 6.5% in terms of GDP number, which is good.
Which is good.
And my own sense is that barring some correction that we are in the midst of, in the next 40-45 days, we should be seeing a consolidation and an upward move, and these could be the periods where quality stocks should be accumulated.
Okay, so you're saying we're sitting in a sweet spot right now?
I would hint that.
All right, I got it. And you see, a lot of investors have flocked in since 2020. They're all very worried because probably they're seeing this level of correction, this magnitude of correction for the very first time. Are long-term investors also intimidated by such corrections?
Nobody likes to see declines in their portfolio, right? So that's a very human and psychological reaction to what you have got used to. First-time investors who may be experiencing the price declines are obviously going to be slightly more nervous than those who have seen cycles, right? So those who have seen market cycles will rough it out. There are also smart investors who take these opportunities to accumulate and build their portfolios. So I would still reckon that those who are trading for the first time should exercise caution, but should not also get unnecessarily nervous.
Correct. So Vineet, as you guys finish your quarter century and moving on to your half century, what do you have in store for the Indian consumers, and how are you going to tap into the excited Indian investor space now?
So there are two ways to look at it. One is that we want to expand the customer segments, and the second one is to expand our product offerings.
Oh, lovely. That sounds like a very rapid expansion. Is it?
Yeah, it's rapid. We always say that we want to think slow, act fast. So there are times when we take time to come up with a strategy, but then when we are clear in our heads, then we roll it out quickly.
And with all the things that are lined up for PhillipCapital, what excites you the most in 2025?
What excites me the most is the fact that we are able to respond to the changes, as quickly as the changes are happening, right? So that's the most important thing. There are changes that happen to the technology side. There are changes that are happening on the regulatory side. There are changes that is happening to the markets themselves, to the geopolitics related response to how India as a market will do. There are changes that we need to take into account in terms of the sectors that our research analysts need to continuously cover, right? So there is a lot that goes on in manufacturing, electronics manufacturing, semiconductors. So there is a constant high that we live under.
Right. But amongst other avenues that you're tapping into, are you excited about the retail space that you are now targeting?
I guess the way I look at it, of course, retail is exciting because the target audience size in itself is very huge. But I think we are not entirely wired as a firm to look at retail space as well as some of our other competitors do. We are trying to come up with a strategy and change in our own organizational structure to look at that, the retail as a space more, more comprehensively. But suffice it to say that we do have that particular client segment also as a part of a strategy.
So you're still optimizing this segment for you to do better for them?
Yes, because we are essentially set up as a high touch broker, right? So we were always driven more by ideation, investment ideas, hand holding, really looking at customers' portfolios. That's how we started handling and advising institutional customers, family offices, ultra high net worth individuals, HNIs, but we are looking at that entire array of customers, and therefore retail is a segment that we don't want to ignore, but retail is a segment that is the newest for us.
Okay, that's great to know. What worries you the most about for the Indian consumers and the Indian investors in 2025? Like the markets are falling, people are panicking, might be selling stocks. What in general worries you the most about the Indian retail space?
I think what worries me the most is the incomplete information or incomplete understanding of both the markets and sometimes the stocks or the sectors.
Absolutely.
There is a lot that happens in our midst, which essentially is incomplete, but our regulators have been on top of it in terms of reducing the amount of misinformation, wrong information, unauthorized and unvalidated information that reaches the retail customers. So that is troubling because one wouldn't like to see the youngest investors and the smallest investors to suffer. For our markets to remain mature and sophisticated, it is important that they do become inclusive.
What is PhillipCapital doing to protect the consumers, the Indian retail space?
One is we are very, very conservative about claims that we make, right? And the marketing narrative that we use whenever we are in front of an existing or a potential set of clients. It is important for us not to assure, promise, or glorify the potential returns that people can make from financial markets. We take it upon ourselves to really dilute. We take it upon ourselves to get almost everything vetted through our compliance department, even before it goes into print or in media or on social media handles. So we want to remain a firm which is conservative and slightly more conscious of the role that we play as responsible market intermediaries.
Got it. With your experience learning about the retail player and your tremendous experience with the HNIs, what is something that the retail players can learn from the HNIs in terms of how they manage their investments, or whatever else that you might think the retail players can learn from them?
I guess the retail players need to obviously understand that they need to invest their time to understand both markets and any type of sectors or stocks that they are investing in. I know that many do not have the wherewithal or the ability and time to invest in understanding the markets, but it is important for almost everybody who invests in the markets to know what they are investing in. I mean, this is a very technical thing that you put out a disclaimer that
Right.
that you have understood the risk and that you understand that there are potential losses, but it really needs to be practiced. You really need to, as a retail investor, spend some time, read, discuss, talk to your broker, talk to your other friends who are slightly better or a longer long time investors, so that you take position and you take construct a portfolio which will put you in good stead, because the markets will be up and down, and to panic at a time when markets correct may not be the most optimal reaction for a new or a retail investor.
And why do you think most people are actually panicking? What's the potential root cause they're panicking?
I think one is the extent of decline.
Yeah.
Right, and extent of decline, and some of the names in which the decline was seen or is still seen has been quite painful. Right, so 40%, 50% type of a decline. The same is also visible in the mutual funds. Right, so one knows that single stocks magnify the correction, both up and down. Mutual funds should reduce that amount of that magnification, but it still will show a trend of up or down. And if you were to look at how SIPs have behaved in the last 45 days, you will notice that the stoppage ratio has gone up, which means that the retail investors who had decided to invest small amounts every month have actually panicked and have stopped their SIP.
Okay.
Now that may be an impulsive, very psychological reaction to what they were seeing to the NAVs, but there will also be a time, hopefully very soon, when they will regret that they have stopped that SIP, and then they will restart, but they will restart at a point in time when the NAVs would have moved up
again. Yeah. So Vineet, what do you think about the current valuations of the Indian stock market? Do you think the P ratio is favorable? Is it a really good time to be accumulating maybe? Any comments on that?
So PE ratio, it is the most often used metric, right? So anybody who has to talk and give a commentary on whether the market is properly valued or not, they just focus on one number, which is the PE, whether it is for the stock or the sector or the broad-based index. My simple recommendation is that you should look at valuation or the pricing of a stock or a sector in a slightly more holistic manner. What I mean by that is that PE, if you look at, and it is very easy for us to say that the Indian PE has always been very high, but emerging markets and growth markets are always likely to demonstrate higher price earning multiples.
Right.
And why does it happen? Because the underlying growth of the market, the sector and the stocks are going to be more. And one of the things that I always like about Indian markets or any other emerging market is that the return on equity and the return on capital employed is always going to be good. So if you have to think about whether the company is properly valued or not, then you look at a price earning multiple, but you look at the book value, you look at ROCE, you look at ROE, and then make a proper judgment. From all these perspectives, while the market PE has declined because of the correction and it looks cheaper than what it was 4 months ago, but I still would say that as the market comes back in terms of its levels, the price earning multiple will start looking richer, right? But do not get discouraged by the fact that India PE has gone back again to 22 or 23, right? For one, we are domestic investors, right? So the number of alternative investments that we have in front of us are going to be limited, right? We could diversify our portfolio between India and perhaps some other country portfolio, but primarily our wealth is going to be made in this particular market. So let's not stress about and start looking at the same narrative that a global investor does, for one. Number two, it is important for us to also understand that even if the PE is higher for a stock or the broad-based market, is it justified, right? That the price earning multiple is as high as 23 or 22 or 24. If you get the answer as yes, it is okay, then invest.
Right, got it. You just mentioned that developing countries often enjoy a richer PE valuation and they can sustain that for greater amounts of time. Why is that so? Is it attributed to the GDP growth? And so, like, correct me if I'm wrong, is it attributed to the GDP growth plus the inflation basis which we can expect the CAGR growth year over year? And add very nuances, whatever I might have missed.
No, so one is a macro,
Yeah.
right? So the macro economy has to do well if all or some sectors within the economy have to do well, right? So of course you need to see how the GDP is growing and how it is translating into corporate earnings. When you come to a stock, you are actually zeroing down onto a company. When you are looking at a company, it is important to see the EPS growth. So if you look at it, how the earnings are growing and the embedded CAGR in it, or the the IRR, if you want to look at it, then that is exactly the way to look at the company properly. If the company is growing year on year 15%, 22%, 30%, then obviously this company is going to command a price earning multiple which is going to be richer than some other company which is growing at 15%.
Correct. Same goes for countries as well.
Absolutely.
The high growth potential countries will enjoy a higher P valuation for their overall index.
Yes.
Right. Now, coming to the retail investors who are panicking, what would be your word of caution? One advice for them, firstly, good, valuable insight for them in terms of how to control their nerves. The average Indian age is 29 today. They're the future of India and the investments. So something for them to take for the longer term and grow wealth in the long term. And then we'll touch up a word on caution for you.
So it is important for us to know, or for each one of us to know, what is our starting objective, and have we allocated a portion of our investable money which is disproportionate to the amount of money that you have. Right? So if you have, for example, 1 lakh rupee in your bank account and you are putting 80,000 rupees in the stock market, then obviously you are really taking a completely different kind of a call.
Right.
And
huge bet, probably.
Huge bet, absolutely. So because you look at financial resource to take care of your day-to-day life and your near-term future and long-term future. Right? So it is important for us to align what is it that your immediate or the current financial requirements are. Are you looking at buying something, going somewhere, supporting something, vis-a-vis something that you can put aside from this investable amount and let it be there for 5 years, 7 years, 10 years. It is important, therefore, not to have these misaligned objectives and misaligned allocation of monies. The moment you know that the amount that I'm allocating to the market, right, financial market, is something that will allow me to handle the volatility in the market without panicking for a 5 to 7 year period, you will always be better off. Right. Than saying that, oh God, I always thought that this money will multiply in the last 6 months, because that's what it did for the last 2 years. And now I'm in a soup, because now how do I go and get my kids admission, or what do we do about the family vacation, right, and all of that. So it is important to keep that discipline in check. A lot of it, obviously much talked about, stems from both greed followed by fear.
Got it. So would you say a lot of people are investing more than they're capable of digesting a downfall for, or maybe कि आपकी रातों की नींद नहीं खराब होनी चाहिए, उतना ही पैसा लगाओ कि कल मार्केट 15-20% भी कल ही गिर जाए तो आपकी रातों की नींद ना खराब हो.
Yes, very much so. Very much so.
Got it. One question from your personal experience. What was the first time you experienced a market crash that you probably didn't anticipate? What exactly were the emotional roller coaster that you went through? So, and what was the cycle?
So I think the first time I saw a more precipitous kind of a market downfall was the internet bubble burst, which was the 99-2000 period.
2000.
And at that point in time, a lot had happened because India was becoming a liberalized country, right? There were reforms that had been put in place by the finance ministry in terms of attracting foreign capital. There were new set of investors and new set of companies that were that were getting listed on the stock market, and then came this particular crash, right? So this particular crash or correction in the market was obviously something that I was new to, many were new to, but the lessons that we all learn is the other word of caution that I was just talking about earlier. You need to understand how to handle your own emotions.
Yeah.
I mean, I'm talking about something which could be a psychology chapter, but it is important. How do you manage bad news, right? How do you manage losses? How do you manage something that you had not planned for? And all of it comes only from better planning.
You sound like you were always a prepared investor. In the first crash that you witnessed, did you not panic? Were you very comfortable with it?
My level of panic was lower, perhaps because my level of responsibilities, right, as a family or as an individual was lower. So again, as you go through the life, your risk taking or risk averseness changes, right? Because there are more things and more people at stake as you move forward. So when you are very young, it is almost unless you have a family or parents to support. And then comes a time when number of people who are a part of your life increases, and therefore your risk-taking ability changes and should change, because it has to be aligned to what is your responsibility. And then again comes a time when a lot that you wanted to do has already been done, right? And now there is a period, where you can become slightly more patient, long-term oriented, not necessarily risk-taking, but you can, participate with a different mindset.
So thank you so much, Vineet, for your time, and all the best to you and to the Indian retail investors.
Thank you, Vidhaan.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.